All right, the market started the week on a strong note today, kind of following up on last week's strong week, reversing the week prior's 5-day losing streak. We've had a really good run in the technology sector that's led a lot of this bounce. And we've had some good growth in some other areas like emerging markets, especially in the last couple of days, and then small caps today. And we also have another sector kind of joining the fray today. So I'm going to break down the moves right now, the technicals behind the current market environment, as well as a way that we might be able to make a trend trade in that new sector, that second sector that joined in the outperformance of the market during this bounce. So let's go ahead and get started. Today is Monday, March the 18th, 2019. This is the market outlook from MarketScholars.com. My name is David Settle. All right, well, let's start off taking a look at the S&P 500 with the market forecast indicator. 1, 2, 3, 4, 5 out of 6 days to the upside here. One small down day last week, and that was just about it. We've rallied off of this low point with 2743. We're almost 100 points off of that already. The near-term line obviously still in the upper half of the chart, continuing to bouncing up, but obviously still lower than this peak. And if you look at the corresponding levels on the S&P, we're already higher. So if we don't breach this level 94 plus on that near-term line, then that's a divergence setup potentially. So we'll keep our eyes on that as it potentially comes towards the end of this current near-term run. Remember, near-term runs typically last 7 to 12 days. This is now 6 days now that we've been above 50. And it's starting here, so it's 6 for 1, 2, 3, 4, 5, 6. Yeah, 6 days. Then it's been above 50. Strong bullish posture. Market sentiments lines continuing to rise and getting closer to 75 now. So continuing a bullish trend. Obviously, that's kind of normal. But if you look at the Dow Jones Industrial Average, obviously we're already above those highs on the S&P. We're not above those highs in the Dow, and that Dow continues to be depressed by what's going on with Boeing, one of its biggest influences on the price-weighted average. You can see the intermediate posture is not strongly bullish. The near-term line is up above 50, however, and just not as high in the reversal zone. The momentum line didn't fall as low as the S&P did. And of course, the other big outlier on Friday, you can see the NASDAQ looking very similar to the S&P, because right now the S&P kind of over the last so many days has been led by the NASDAQ. I apologize for that, a little bit of something going on there. But you can see that Russell continues to lag. Now, we did have a little bit of a breakout finally today, so that's positive. The near-term line did bounce back up off of a low. See, the S&P didn't drop nearly that low, but that's a bullish low point in the Russell 2000. We're already above the high that corresponds to that peak on the near-term line, so that's a good sign. We're just, again, like the Dow, not close yet to reaching this high point that we're already above on the S&P 500 and the NASDAQ composite. Regardless, this long-term market sentiment's looking positive, so that's a good sign for the small cap index, just not as bullish. And that's what you want this to be, more bullish. And it outperformed today. You can see small caps and mid caps both outperformed double what the S&P 500 did. So that's a good sign. That was a broad rally today. It's just hasn't been as bullish until today. So we need to see more of today to feel really confident about this rally, the extension of this rally going forward. Because remember, this pullback was very minute compared to the rally we had ahead of it. So we really haven't pulled back yet. We haven't consolidated any of this rally yet, especially on the NASDAQ and the S&P. We're already up above. So, this is obviously the market didn't put a lot of stock into that. So that would not be considered an intermediate pullback. That's why I still got the potential retracement lines there in red to show where we could fall down to. And remember, too, I've got the Fibonacci fans to give us an idea of when we can fall down to those levels. You can see now, still looking at kind of the beginning of April for any potential weakness over the next couple of weeks that could get us down to around that level, at least to this 23% line, lining up with the old retracement level that we busted through or down here to 2650, which would obviously be a much deeper pullback, but still would just be a Fibonacci. I mean, it would just get us down to the top of the Fibonacci retracement. So that, as deep as it would be, it wouldn't be abnormal. It would just be deep because of how big the rally has been thus far. All right, before we look at some other charts, reminder, subscribe to our YouTube channel. Mouse over our logo right here in the bottom right corner of your screen. Click that red subscribe button that pops out. That will keep you notified as to when these videos are posted. Also, click the thumbs up icon down below the video. That tells us, when you click that thumbs up, it tells us you want us to do the video again tomorrow. So quick, easy way to give us feedback you can do right now while you're watching. Also, comment down below on anything that stood out to you. I want to see what you got out of the video tonight. Any one thing or more, but at least one thing that you got out of the video tonight. Also, join our Daily Market Outlook email list. There's a link popping out in the top right corner of your screen. Follow me on Twitter for more content like this in between videos from day to day. And also join our Market Outlook community that we've created on Facebook. Also, like our Market Outlook videos here on Twitter and Facebook. You can click this little heart underneath, if you're watching the video on our blog, right underneath the video. Click on that heart, opens up a new window where you can like tonight's Market Outlook tweet there. Click this image, takes you to your Facebook account. You can like our posts there as well. The more you click on those posts, the more that they keep pushing our content out, as well as the more they keep pushing out to you specifically, because they will push it out to the content that you engage with the most. So make sure you stay engaged with us by liking those tweets. Remember, you can also comment on our video in our Market Outlook forums on marketscholars.com by using this link. Open up any new thread there. Reply to anybody else's thread. You have to subscribe to our site to participate there, but you can do that for free by clicking on this image right here. All right, back to the chart. You can see how the weekly chart is shaping up here on the S&P. So, a small range. But if you look at the Heikin Ashi candle, you can see back to a bullish candle. So again, similar to what we saw over here on the bearish side, where we got a couple transition candles here and then resumed the downward decline instead of reversing. So here we got a couple transition candles and it's a temporary continuation. And so again, we're continuing the bullish move to the upside without the reversal to the downside. Again, you would expect that to be a temporary continuation. We'll see how long, whether it lasts 1, 2, or 3 weeks, like we saw over here, before we finally got the bullish reversal that you can see has really overcome that 3-week extension and then some. So, but if you look at the Russell 2000 on the Heikin Ashi candlestick, remember it hasn't been as bullish, right? So you can see it's had this transition candle period here, and then a bearish candle. Last week was actually a bearish candle for the Russell 2000, and then back to semi-transition candle this week, very small range, and we'll see if we end up with a small. We're very susceptible to both a longer and an upper shadow, so still kind of a transitionary period as well for the Russell 2000. NASDAQ and the Dow Jones look similar. If you look at the Dow Jones long-term lines, again, also had more of a semi-transition, bigger body, but still a transition candle last week, and then this week not nearly as bullish as you see on the S&P 500. So it's really the S&P and the NASDAQ that are kind of leading the way here in bullishness, despite today's outperformance in the smaller cap space. Let's look at the 3 green arrow chart for the S&P 500. Obviously, we got 3 green arrows still, rising moving average. We're above both a rising 8 and 17-day moving average. MACD is now above its moving average. That's why you got the green arrows, but obviously not close to a new high yet, even though we're already to higher highs here. So another bearish divergence that we're keeping our eyes on, and we'll see any kind of weakness of that divergence if and when we break back down below that 8-day moving average, or when we will, because we can't stay above it forever. Even this, as long as we were here, we couldn't stay above it forever. So we'll see how long this latest rally above the 8-day moving average lasts. Again, if you look at the Russell 2000, the similar index here, or similar study set, and you can see we're kind of bouncing. The 8, 17, 30 are all sitting right on top of each other. So the MACD got all the way down here to 0. Remember, when you're in bullish trends, the MACD stays above 0. Maybe a brief dip. So you can see when you're on bullish trends, it stays below 0, the blue line, with a brief dips to the upside. And so you can see over here how bullish we were, brief dips to the downside. So the Russell's the one that's come the closest. See, the S&P came down, but the Russell actually dipped down just a smidgen below that. It's okay to go a little bit below that, you know, as you say here and as you saw here, but obviously here's what a bearish trend looks like from a MACD perspective. So still a bullish trend, still some relative weakness in the S&P and the Russell 2000, the small cap space, which you would want to show relative strength instead. Now let's look at the intraday chart, and you can see we got a new 4-week high today, just barely, but we got a new 4-week high today at the open, and we had some weakness early, but recovered and closed a lot closer to the high of the day than the low of the day. The Heikin Ashi open here is down towards 278. That's about where the midpoint of the range is and will be, because of the low. It's going to be a while before we move the low point. We could move the high point a lot easier because we're sitting right on it. So we can move that dotted line up if we push the high up, but the low is not going to move up anytime soon. You can see we had a higher high and a higher low today. The low of the day kind of flirting with where we closed at, despite a nice little bullish move to the upside right at the beginning of the day. But if you look at the volume and the range today for SPY, does that? There we go. You can see the range was only 1 1/3 points. Very, very low range. You saw how we filled in the gap early in the late morning. So very small range there. The volume 62 million, also very small volume. So these are small numbers. 1.3 is way down here below the 52-week range. The bullish trend is intact, so any weakness we ever get will just be a pullback with the ATR really low, down below 1%. And then, of course, the volume 62 million is like right in this area. So again, right around the 52-week average low point for volume. So, and then finally look at volatility, and volatility is still sitting right at that sweet spot for the bullish trends. We've broken below 90%. We've broken below it for now multiple days, so it's held. Every other time we broke below, we bounced right up. So this one's held, and then last week was our first week that we've really closed below the 90%. We had a couple weeks over here, but we bounced off of that. So we'll see if we are able to hold this for another week or two and really kind of solidify from a volatility perspective, from a range perspective, the new trend that we have. You can see, we talked about that long upper shadow so many weeks back on that Christmas Eve week. That long upper shadow for volatility on a weekly chart can typically be bearish for volatility, and you saw that that's the way it played out. All right, so to summarize, the market outlook shows a persistent bullish posture. We've talked about this bullish posture before. We've talked about how we've been on this kind of impulse move, this inhale, quote-unquote inhale, for quite a while without a nice normal exhale. And until that happens, momentum can stay strong on a trend for however long it takes for the pain trade to reverse to the other side. And right now you still got the pain trade going to the upside. Not again because too many people are shorting the market. That's not the case. That was the case early in this trend. Now you got the case that too many people are sitting out, right, and looking to get in. And until you get those people in, and especially because they'll be getting in late, that's when the pain trade will switch to the downside, and that's not there yet. Knowing that can occur sooner rather than later, we need to make sure that we're aware of that risk factor not by avoiding bullish trending trades. So we've been making bullish trades in this video for the last few weeks, with a few bearish trades kind of mixed in between there. But to manage our risk on our bullish trades so that if there ever is a deeper intermediate pullback, then we won't get hit. Our portfolio heat isn't too high that we'll get hit too hard in that scenario. So what do you think? Do you agree with that or disagree? There's that link popping out there. Click the link to open up the poll, then hit either agree or disagree. If you disagree with this market outlook, then scroll to the comment section below and type in what you're seeing that would suggest otherwise. All right, now let's take a look at what's driving price action. And this chart here goes back to so this is including that 6 days. We've been up 5 days plus that day before where we opened down and then finished the day higher than we opened. So you can see crude oil was one of the biggest driver. Has been really the biggest driver since the October high and the Christmas Eve low. It dropped quite a bit, and it bounced up quite a bit up to this high point. It led the declines during this semi-exhale pullback that we had. With that 5-day decline we had 2 weeks ago, and you can see it's up from a 3% loss to a 4.25% gain in that time. You can also see emerging markets kind of had some weakness here last week a little bit, but have since bounced up in the last couple of days really strongly to the point where they're up almost 4% after being down 1% during off of that low. So they're also a strong mover. You can see too. EFA was also weak early and now is up over, outpacing the U.S. stock market during this rally as well. So you can see small caps lagging behind. The S&P 500 really the last so many days been lagging, and the dollar continues to be weak. So that's helped like gold do okay, hold up. It's helped these international bonds do okay. Of course, preferred stocks are lagging behind during a bullish move, but they are outpacing high yield debt, and you can see treasuries are up, which means despite the rally, yields are down. So yields still continue not really to confirm the move that you're getting in the stock market. You can see after the decline Friday, small rally today in yields. Small loss. You can see about as flat as you can be in the long-term bonds. Of course, the dollar index also continuing lower towards. So that you don't have the. If you look at the market forecast chart here, remember the bearish combination is a dark pink shading and a dark red line. We have that. We have that over here with when we started the decline. We have that still here after a brief little bounce. We have a dark red line, dark pink shading. So strong bearish posture on yields. You look at the dollar index, you can see it's not really strongly bearish yet. We don't have the dark pink shading with the dark red line. We are below a rising moving average, so it is yellow. It's got to be red, right? And then of course the intermediate line's got to drop below 50 to get that dark pink shading like we did a couple weeks ago. It didn't hold, right? And we didn't get the change to a red line. So we'll see if that ends up being the situation here. You can see that's when you get more of a bearish run like we had here, and even over for a while like we had over here. If you look at gold and crude oil futures, here's crude oil and how bullish it is. Dark green line, dark green shading. Then you look at the gold prices and you can see green shading, bullish posture, but not dark green, and we're not above the moving average yet. So kind of sideways, not really bullish, not really bearish yet either anymore on gold. And of course it's hard for gold to be too bearish when the dollar is falling, and when they are, then that's when you really know we're on this risk on move. I remember a lot of the weakness, a lot of the strength in the dollar a few weeks ago was because of this weakness in the euro. The euro has kind of stopped the bleeding after that kind of false breakdown there. We even kind of looked at that as a potential false breakdown. We talked about that before. We also talked about that in our portfolio management class. Don't buy into that. A lot of times it can be a false move, and so far it has been, as we've rallied back up since, and potentially are moving towards a dark green line and dark green shading with the intermediate line rising above 50. Of course, this is the biggest currency weighting in the dollar index futures contract, the euro. So if the euro gets more bullish, that's going to be bearish for the US dollar. And of course the pound's also got a weighting in there, and you can see the pound continues to move on a bullish pattern against the US dollar. Of course, our biggest trading partner, if you look at the trade weighted dollar index, is actually a Canadian dollar, Canada. And Canada is showing, or starting to show, a bullish trend, or the dollar is showing a bullish trend against the Canadian dollar. So not as bullish because we got some pink shading, and we'll see if that holds up or not. And if we break down here, that's again going to kind of show how bearish the dollar is, not only on the futures contract, but also on a trade weighted basis as well. All right, now a quick look at the sectors. You can see the biggest driver here for the markets off again that low point that we had the Friday before last week, where we again closed higher than the open. Energy stocks was the biggest loser there. And energy stocks have rebounded. Not, they're up, about 4.5% off of that point, down 2.5% now, up 2. But you can see technology stocks started that day down 1%. Now they're up 5%. So it's a 6% swing from low to high. Technology stocks really leading the way here. Semiconductor stocks, obviously Apple's in that sector. You can see on the other end of the spectrum, all the other sectors, except for financials, which had a big bounce today, all the other sectors are lagging the markets, including industrials. Of course, we know why. Industrials have lagged the whole time because remember, they had the down. You can see how Boeing pushed that down early on Monday last week, and it stayed down relative to the broad market the rest of the week. But you can see both these consumer discretionary and staples industries lagging the market. You can see materials and energy also lagging the market. If you recall, economic growth expectations are still close to zero. Those economic growth sensitive areas, industrials, even without Boeing, probably wouldn't be outperforming. You can also see utilities and real estate lagging behind. Even though bonds during this period aren't down too much, they were down a little bit today. Bonds have actually been higher, but these interest rate sensitive areas have been lagging behind. Of course, they've got the biggest gains really since October. Remember, again, from October the 3rd, when we peaked, before all this volatility started. That's the last day right before we started the declines. Since that period, real estate and utilities have, they're up 10%. From that peak. The market's still not even, the market itself, the broad market's still down 3% from those October highs. Obviously made up a lot of ground off of being nearly 20% down, with energy being down the most, and energy still lagging, unable to really get going here and take off, and staples are even up 1%, outpacing the market since that high. So you can see, and when it's the absolute worst time to buy stocks, it's not the worst time to buy all stocks. It's still a good time to transition and rotate. When you see that rotation into these areas, then you know that volatility is ahead. All right, now let's take a look at our trade example of the day in that financial sector, which bounced up, remember, today. And now, like technology, is one of the only two sectors outpacing the market since that last Friday, from a week ago, Friday's opening low point. If you look at Goldman, kind of breaking out today, you had a little volume node in this area, a lot of sideways action, a little bit of a breakout pattern. Take a look at the 3 green arrow chart for Goldman, getting above the open Bollinger Band, breaking into some volume area, almost 1.5 times the average volume down there. You can see here, let me go to a 3-month chart. You can see the volume there. 3.8 would have been the 1.5 times. We're at 3.35, so really close with 3 green arrows. You can see if you take a look at the 2-line version, see the MACD is still up above 0 and now is back above its moving average. They're both rising with the stochastics as well. You take a look at that, the long-term chart, the long-term moving averages, and you can see we've kind of consolidated here for the last so many weeks, and looks like we might be trying to break out. Obviously, we still got some more room to go this week. We got 4 more days left, but you can kind of see the pattern, a little bit of a breakout pattern developing. Let's look at the market forecast chart. You can see dark green shading, dark green line, good bullish combination. And you can see kind of breaking through a bunch of highs here and getting really close to breaking out above all of that. And again, as you saw in the Bollinger Bands, you're breaking into a key volume area, right? That's getting above this volume node, getting back into where most of this year's volume has been. So you've got a good run up to about 228 for it before you start running into another layer of significant volume. Finally, let's look at the DMI. Remember, we're bullish when we get that plus above 25, and it is. In fact, the negative is back below 20, so that's a positive sign too, to get that negative down there. You can see the gap is getting bigger, which means the trend, which has been so sideways for so long, is now starting to rise up as well. So there's opportunity for a decent move to begin here, and what has been a relatively weak sector, and Goldman Sachs being an underperformer within that financial sector, but has been gaining some momentum and moving towards some relative strength. again, with the sector itself also underperforming the broad market, and also as well moving towards some relative strength. So we might be able to take advantage of that with a move. We can even trend trade the stock with a move up to kind of targeting in the next little bit that 220. Now it's about 228, and that 228 area, which is about another $20 away. Knowing that this range is so tight that we can put our stop order down below here and give ourselves a really tight trade risk for the potential reward that we can get to the upside. All right, well, that does it for tonight. Now I want to hear from you. Remember to use that link that's above the video in our blog to take you to our Market Outlook forums. Open up any new thread, reply to anybody else's thread. What questions or comments do you have for me today? If anything we talked about in the video or anything we didn't talk about in the video, make sure you open up a new thread there. Again, thank you very much for watching. Remember to subscribe to our YouTube channel, click that thumbs up icon, and comment down below. Follow me on Twitter for more content, and be sure to join our community on Facebook as well as on marketscholars.com. Have a great rest of your evening, everybody, and we'll see you all tomorrow.